everybody. We're doing Ticker Talk today on our new day and time. So let's do our quick little disclaimer, of course, like we always do. Oops. There we go. All right, everything we do here is for educational purposes only. We're not investment advisors and do not provide investment advice. All statements made here today are my own personal opinions and not to be considered advice to buy or sell any security. And all trading and investment decisions are your own and done at your own risk. All right, we got that out of the way. All right, I'm Kevin. I think everybody knows who I am. We'll just blast through that. We're going to take a look at the market. We'll look at some major indices. We'll look at the volatility index and some yields and the dollar index. We'll look at some key sectors and we'll see if there's any setups. But first, we should probably talk about, let's take a look. We've got Jay Powell tomorrow. He's got a big speech at 9:10 a.m. So this is before the market even opens. So it's probably going to be really volatile in the pre-market tomorrow morning, and that's going to set us up for the rest of the day. So
that's Eastern time, right?
Sorry, that's
Eastern. Okay, Eastern.
Yeah, Eastern time. Yeah, this should be interesting, and I think that considering what happened in the market today, I think the market has decided that they're not afraid of what he's going to say. Remember the last time he spoke, the market really did not like it one bit. So it's interesting that we rallied today, right before this big speech. Yeah, I can't wait to see what happens tomorrow morning. Hopefully we keep going. Hopefully it doesn't scare the market again. So all right, let's get into our charts here. We're going to start with the SPY, of course, as we always do. So you can see, nice big green candle today. And, I know you guys have been reading the morning briefings and everything. And I have been talking about this level here for a few days now. How important it is that we hold this level. You can see we've got a trend line right there. We've got this 618 Fibonacci retracement there. And we've got this support level from, that goes way back into the past. There's been a support and resistance level a number of times going back into the past. And that has been holding. We tried to poke down through it yesterday and bounce back up. And that was, even though yesterday was a red day, this was pretty bullish signal to me. But this morning this morning we did gap down a tiny bit, but we just started to kind of rally most of the day, and it was pretty smooth all day long. If we look at our intraday chart on the SPY, I'll go to a 5-minute here and the big one in the middle. We can see that on a 5-minute chart, this was a pretty decent up move all day long, and I think it was in here, I believe. I mentioned in the Discord that there was a really nice bull flag forming in here. I think it was in here. But it did kind of fake out to the downside of that and then recovered really quickly and just started moving up again the rest of the day. So this is really bullish price action intraday on the SPY and in a lot of your stocks too. Everything I'm looking at right now is green except energy. And that may be one of the reasons, with energy not being green, might be one of the reasons that the major indices and the companies within them did so well today. That and a couple of other things that we'll look at as well. So let's look at the Qs really quick. Get back to our daily chart here. There we go. You can see very, very similar kind of price action on the Qs, where it was at it was at the 618 retracement and kind of in a support zone, and had a nice big green candle today, but right up into resistance. So we want to see it get through there and maybe start attacking some of these other levels above here. IWM, very similar. This is the Russell Small Caps. Nice big green candle here right off of some support. So, you know, we can start doing some repair work here. As long as Powell doesn't scare the markets in the morning. All right, let's take a look at the volatility index. There was also an interesting price action here intraday. So you can see that over the weekend, I was talking about this bull flag that was forming here. And the one thing we don't want to see happen is, you know, for us to break out the top of this bull flag, because breaking out the top of the bull flag in the volatility index is actually bearish for equities. So that we move down out of this consolidation, out of this bull flag, and have broken out the bottom of them, that's great. Now, what would be really nice to see tomorrow is this to continue down further and get through this former uptrend line here. It's really nice to see this, you know, volatility index roll right over. Be very bullish for our equities. And we'll look at the 10-year yield. So you can see that had a red day finally. It's coming up near near this all-time high, or well, not all-time, but a one-year high anyway. Got up near there and is potentially starting to roll over. I mean, one red day does not make a rollover, and it is kind of inside the previous day. But be nice to see this come down, you know, finish closing this gap and even come down further. That would be good for equities as well. And let's take a look at the dollar index. And this had a very nice red day. You can see that this, you know, we've got this steep uptrend going here, and I just hate how steep this is. I hate that this keeps breaking out to new highs. But today was a nice red day. If we can follow this up with another nice red day tomorrow, this will be very good for equities. It's equities and the dollar index are almost perfectly inversely correlated right now. And that's, you know, that's dangerous. We don't want to see that. So the farther this dollar comes down, the better. We can, you know, get a rally going in equities and sustain that rally if this can, you know, keep coming down. Even if all it does is come down to this trend line, and then if it is going to go up, you know, sort of resumes at a much more reasonable trend, because this got really steep in here. So that's our dollar index. What else? Oh, we should maybe while we're on the screen. Well, we looked at this over the weekend. We can see that we turned red, or step one of turning red on our dollar cost averaging system. The MACD is not crossed down yet, so we haven't you know, completely turned the system off. But this is definitely a strong warning sign because we're below the 20-week moving average. But it looks like, you know, we're only 3-4 points away from moving through the 20-week moving average, and we've got, you know, 2 days left this week to do it. So yeah, we may turn green again in here by the end of the week. All right, let's look at some of our commodities. Gold's not doing too much. Silver had a big move today. Let's get back here. Silver had a big move, and you can see in the after hours in the futures, this little dash, it looks like there, that's actually a gap up for the after hours. So it seems to be coming off its bottom, which is good to see because, you know, silver has a lot of value as an industrial metal. It's kind of half that store of value like gold, and then it's half its value of an industrial metal. And if silver is doing okay, that is generally good for the economy. Same goes for copper. I believe copper had, okay, yeah, copper's not doing a whole lot, just kind of hanging out, consolidating a bit. So really not much to see there in copper. We look at the DBC, the General Commodities Index. You can see that this broke down out of that channel we were watching, and it's now below the 200-day moving average. This, of course, is mostly because of the move in oil that we've seen in the last few days. DBA, the Agricultural Commodities ETF, that has moved down a little bit too. That actually had a really strong morning, and wheat was up a lot this morning. But pulled back a lot. There's talk of a deal a deal, a Russia-Ukraine UN deal for Ukraine to be exporting potash and other fertilizers, which would be really good news for the countries that rely on those fertilizers to grow their food. I think that's why we're seeing, we saw this sharp move down intraday in agricultural commodities. So if you're in there playing, this is something to keep an eye on, and keep an eye on that news about fertilizer exports out of Ukraine. All right, so the elephant in the room this week is definitely crude oil and natural gas. You can see that crude oil has broken down below support. Had a terrible day, and there's not healthy action for our crude oil trade. There was I read a headline about $1.5 trillion worth of margin calls, presumably on longs in the energy market and mostly in Europe. But I think that this is why I think that a lot of traders were having to liquidate their long trades, their long energy trades, and this is why we've seen such a strong move down like this. So those sort of events usually resolve quickly and turn back the other way. And it seems to me with oil below 85, we're getting into an area where it's going to seem cheap. I really think that 80 is going to hold. I'm going to actually put a line on there at 80. I'd be surprised if it doesn't hold. So I'm kind of hanging, as you all know, I've got a lot of energy trades on right now. So taking a little bit of a hit at the moment, but I'm still short-term bullish on energy, and short and intermediate term bullish on energy. But I do want to see this 80 level hold in crude oil. Now, if we look at the XLE ETF, sorry, e-signal's slow this afternoon or this evening. XLE, the XLE ETF has come down and tagged this support line, and my alert for heads up, and bounced to there. So that's good. That's nice to see. It would be really nice to see this, get back through this little, support resistance line and start moving its way back up. XOP, the oil producers, have broken this trend line. You can see we've got a little trend line there. That's broken. But again, we've got a little bit of a doji, a little indecisive. It may be bouncing off this 100-day moving average. We need more time to see. But I do think this is going to turn back up. OIH is the oil services ETF. This one isn't looking wonderful either, although it is trying to find some support here. I'm not sure where all the lines I've drawn on all these charts have gone, but anyway, natural gas. This is, really starting to roll over now. We talked about how I was happy that it was consolidating up here, near this resistance. Unlike the other times it got up to that level where it turned down right away. This held up here for a while before falling apart. Now you can see we're trying to find some support here at the 100-day moving average and the 50-day moving average. Jury's out on whether that's going to hold or not. There's another, minor support level just below that. In around 760 or so. So we'll have to see. We need some more time to keep an eye on this. And of course, some of these individual names that we were looking at, MGY and EQNR, have also had another leg down. But again, I'm looking for support in those, and expecting we'll see a turn up. Possibly even tomorrow, or this one's going to stop me out any minute now. Okay, what else we got? TAN. TAN had a fantastic day. This is a solar ETF. This one was up 6% today. really nice move up. So, maybe they're rotating out of these dirtier energy names and moving into, into solar. One of the names we watch in there sometimes is FSLR. This is kind of the leader of the industry. And you can see that that had a really nice breakout of this consolidation today. Closed at its highs. This is probably going to go higher. And remember, I mentioned this on the weekend to watch out for this consolidation. Did anybody get in that? Hopefully somebody jumped on top of that. Uranium, I think, was had a nice up day as well. Although this thing is just so choppy. It's this is a hard play. This is the uranium ETF. The big player in there, as you know, is Cameco. And it's still kind of consolidating. We were looking at this, bit of a bull flag here, tried to break out. It failed, came back. We had a nice green today. So, maybe this just needs to come up here and consolidate a little bit, a little higher up here and then break out. Yeah, I'm not thrilled about that. Much happier about being in the solar space than in uranium. So I think we're going to see a lot of big green bars. So this is consumer discretionary. Nice big green bar after putting in kind of a bit of a double bottom here. But right into a trend line. Although this is, this trend line isn't very mature, so it can very easily get through here. We're also right at the 21-day moving average. XLI, industrials. Nice big green bar. Nothing really special going on there. How about financials? Nice big green bar, but again, sort of potentially coming off a bottom here, right? This is step one of a rally, perhaps, or it's just a one-day wonder. I mean, it's really kind of binary with Powell's thing tomorrow. Technology. Again, trying to put in a bottom. Nice first step here with that green candle, and we have the communications index, and that. Notice how this tagged yesterday, tagged this previous pivot perfectly. And remember on the weekend, I remember saying actually, watch out here because this is probably going to come tag this pivot line. Well, it tagged this yesterday, and it turned up and has a nice bar today. So this, this would make a really nice bottoming pattern if this can follow through here. So you might want to start looking at stuff that's inside the communication sector. I don't think we'll go through all the FANGs. If you guys want to look at any of the FANGs, you can let me know, and we can look at those individually. We'll take a quick look at semiconductors. They had a half decent day. Underperformed the market though. But at least we're getting a little consolidation at these lows here. So if the market continues to rally, our semiconductors are going to rally, but it is concerning that they're underperforming. Chinese internet stocks had a half decent day, and again, look at that bounce. That bounce happening right around support. What else? Healthcare, not too interesting. Biotech had a strong day. This is one of the strongest subsectors that I watch. TAN was the strongest subsector I watch. But again, it's still within a consolidation that it's got going on here. So still needs to do more work before we can convince that anything real is happening. REITs, utility, and utilities had a strong day. It's weird that on a day that was pretty risk on, the utilities also had a really good day. I'm not sure what to make of that. So that's our markets. Did anybody have any questions on any of that? All right. If not, I had one. I want to do this. I want to do one for brownies, so that I don't forget it. But he was asking me about ENPH and day or swing trading it. So we'll take a look at that. And I just wanted to point out a couple of things for him here on how, you might, if you like this stock and you're looking the way this is, outperforming the market, And what's a couple of ways that you could get in there? I think this is good for anybody who's doing some swing trading. Like right now, if you're swing trading, your swing trades should, by intention, probably be very, very short term. And they should probably start out as day trades. And this is the conversation that the Brownies and I were having. So, Enphase is a good candidate for that because it is outperforming the market. It is strong. This is where we want to be. We want to be finding the strength and seeing if we can find plays in there. So looking at the daily chart, you can see that this has been, showing some strength. It has, been in a very long consolidation and may very well be breaking out of that. You can see we should probably actually put in some of these levels. This one, this is a former boundary of the consolidation. And then we had that high here, and you can see that those levels definitely came into play. And then we've got that one there. Okay, so these are the important levels for this, and we'll kind of zoom in a little bit now and get a little closer on this. So you can see it tried to break out of that consolidation back in November, December, and failed. Let's just adjust this line a little bit down to that one right. Yeah, see, look at that. That works so much better there rather than right off the spiky peak of that. Okay. So yeah, I tried to break out of that consolidation, did a very decent job of it for a while, and then failed and came down, came out the bottom of the consolidation, dropped around a little bit, but really since it put its lows in back in January. It had some fairly strong moves down, but essentially we've got a series of higher lows here, really starting in January, and and some higher highs, some more consolidation. But this one right here is the really nice one, and I'm kind of annoyed with myself for missing this play because I think you guys see, you've heard me talk about these enough that you can see exactly what I'm going to point out here is we start forming this base or this consolidation, and then we have this nice consolidation right up near the top of that consolidation, nice and tight too, right up in here, right? And then you have that breakout. Now it gapped up, so that would have been, that would have been tough to play, but it would have worked. If you had just bought this at the open that day, it gapped up, this would have worked for you. We would have got a nice move out of that. Continue higher the next day, and now we've got another consolidation, of course. All right, so just draw that in as well. Okay, now when I see a consolidation, I'm generally not a fan of going in down here. I like to go in up here somewhere, because then I'm really tightly risk defined. But you can still be fairly tightly risk defined if you find a spot to go in here. And on Enphase, there is a spot. Zoom right in here on the daily, and we're going to switch over to to a 5-minute chart on this shortly as well. But you can see we have this consolidation. So we go up, we come down. We put in a low here. So this is nicely bounded. We came down, we test this low again. So after we test this low, and we've got this hammer, kind of a hammer candle, not perfect. We go up, we put in a red candle the next day. So that's not great, but you should be paying attention to that high. So this high here should become important to you. It should be something you keep an eye on. You should maybe be thinking, it's like, okay, so we should have turned up off the bottom here. We did, but then we have this bad day on, I guess this was Friday, right? Not surprising that it doesn't have a great day on Friday. But you think to yourself, okay, if I want to get in this, if I think that maybe this is going to break out the upside of here, even if I just want to play the mean reversion trade just to the top of this channel, I could maybe think about getting in if we break above the high of that day. So that would be our thesis going into the day. We can also draw a little downtrend line here, right? So when you break out of that, you could get in, and that would put you in even sooner. So if we start moving on to some intraday timeframes, So we're going to be looking at a 65-minute chart. You can see how this is set up. You can see that set up a lot better now, right? And the entry was yesterday, and Brownie saw this, and he pointed out this big green candle. He pointed it out on a 5-minute chart as you know, a good potential entry. So this is, let's see, it's today. Lost here. Whoops. Here we go. Yeah, this is yesterday. This is the candle that he was talking about here. All right, now I want to fix up this trend line so you get messed up a little bit. So there we go. That's better on our trend line right there. Good. Okay. So you can see here, you can see now on the 5-minute chart, you can see this, you know, multi-day kind of, you know, bit of a downtrend. You can see that it put in a double bottom a couple of days ago. So that actually, this is another sign. If you're looking intraday, this is a sign to be kind of pay attention, right? And start looking for an entry. And then here is that high from the previous day that I was talking about. We want to actually ignore today on this. So here's the high from the previous day I was talking about. So when this opened yesterday, okay, so here's our open from yesterday. And you can see that, you know, it gapped up a little bit on the open and it pulled right down, it came back up, and it had trouble with that trend line. It consolidated right here. Now, day trader is going to look at this consolidation, and when it breaks out, he's you know, day trader is looking at all this other stuff. And he may be thinking about, you know, getting in on just on this consolidation alone. But he's probably a little nervous about this trend line and then that high from the previous day. But aggressive day trader is going to get on the break of this consolidation. That's why you can see a big green candle here and look at the volume. Okay, see in the consolidation, you know, just sort of normal average volume. Right on that candle where it breaks out of that consolidation, the volume doubles, okay? And then we have another little candle and it paused right at that trend line, less volume, but then we broke out above that. We broke out above the high of the early in the day. So our opening range high, we broke out of that on this candle. And look at the volume coming in. This is when everybody is piling into this because they're seeing it break this trend line, breaking yesterday's high, breaking the high of the opening 15 minutes. That's where people are going in. That's where you want to be going in. So, and the volume confirms this. Okay, we had, you know, the initial volume here. We had the early guys here with the volume. And if you had seen that volume, you thought, hey, something's up here. Want to get in this. And, you know, once you see it break this trend line, you really kind of got to be going in. Hopefully you're getting in here. And if you're a little late, then you're looking at yesterday's high or the previous day's high, and you're getting in around here when it breaks through there. And it makes a nice move from there. You know, so even if you were late, the late entry on this is like 288, 288.30. You know, got as high as 298. That's $10. $10 on a $300 stock is not bad, right? And then started going sideways, but gave you no reason to be scared or to want to get out. And then look what happened at the open today. Nice big move up, breaks out of the, you know, and today it broke out of that consolidation and had a nice move and then continued higher all day. So he was looking at this yesterday, so kudos to him because, you know, he was early on it, you know, caught it, saw it as it was happening. That's great. And did a really good job, I think. So that was an excellent trade. And just wanted to point some things out to clarify some things because I don't think he sort of saw all of this going on. But he knew there was something good going on and jumped in. So kudos on that. Okay. Oh, Brownies is in the Discord. He should be here in the in the ticker talk. All right. Well, that's he's going to have to watch the recording on this. Hopefully, everybody else found this interesting as well. This is a setup you see happen a lot, and I just want to go back to the daily chart so you can see kind of how that sets up on the daily chart. You know, again, see you've got a nice consolidation. It's set up a nice range where you've got good support, and then you get some tight little candles down here near the low of the consolidation, and it gives you a decent entry. And you know, so you can enter there when you break, you know, above that previous day's high, and your stop goes just below the consolidation or even below the low of that candle. And so that's a way to get in these things early. So yeah, it's that was a nice little play there. Okay, so that was ENPH. Has anybody else got any tickers they'd like to look at? So if you got, if there's anything you want to look at, or just any questions in general, anything you want to talk about, we're all good. Doesn't actually have to be a ticker. It could be a general question, whatever you're into. But if it is a ticker, you know, you can just unmute and tell me a story about the stock you're looking at, or you know, let me know if you're investing in it, trading in it, if you're long, short, looking to enter, looking to add, anything you want us to focus on. What's going on?
Hey, Kevin.
Are there two of you here now?
Oh, oh shoot, there are two of me. Well,
okay.
I have two computers, and I was originally looking at one computer that doesn't have a camera. So I switched computers, and now I need twice, but I'll leave the other one.
It's all good.
I guess my question would be, so I have I've been part of Discord since like the Matthew Hugo days.
Yeah.
And that was pretty much when I started really taking like investing a little bit more seriously and things like that. And you know, just trying to learn from other people. But you know, with a lot of the Matthew picks, you know, not that I hold it against them or anything, you know, like I was just learning, but I do have like some small bags from that like time, you know?
Right.
But since then I've, you know, learned technical analysis. I've learned how to like kind of build my own opinions and things like that. But there are a couple positions that are not big. Like they're really small, like, you know, less than like maybe 2% of my portfolio, but I just don't know what to do with them anymore. Like
right.
I'm specifically LC and TeleDoc. I've gotten rid of everything else. And,
okay.
You know, like I said, they're not crazy huge positions, which is why I haven't touched them.
Yeah.
But, I mean, but at some point I'm just like, all right, well, you know, money is money. And, you know, if I could reallocate that and have like a better use for that capital, I would.
It's a great question, and you know what, that came up the other day in the Playboy channel. I don't know if you read that channel or not.
Yeah.
But you know, I mean, somebody basically said exactly the same thing. So I don't know if you saw my response there, because I think, you know, I mean, my response to you is going to be pretty much the same as what I said in there. You know, they were asking specifically about Playboy, and I told them what I'm doing. Like, you know, I have a small position in Playboy. It was small to start with, and it's very small. And to me, it's not worth exiting. I think that for the amount of capital that's sitting there, I might as well just let it sit there. And if it goes to zero, then it goes to zero. It's not a big deal. It's not going to hurt me. And I still like the company. I think that Playboy is going to do well.
Sorry, Kevin, I got cut out for just a sec, but
okay.
You're saying the positions are so small.
Yeah, so my position in that is so small, and you know, it was small to start with, and it became much smaller.
Yeah.
You know, over time. And yeah, I see Ken says he's a bag holder in Playboy as well. So the deal there is it's not a significant amount of money to me. For the amount of money that it is, I'm just going to let it sit because I think there is a chance that Playboy over the next number of years will do well.
Yeah.
I like the company. I like the stock. I don't like the price. I don't like where it's at. I don't want to add to it or anything like that. But I'm happy holding it. Now, that's me and that stock. If it were a large position, if it were a big chunk of money, I would not be happy leaving it there.
Yeah.
If it were a company like TDOC, for me, now I got out of TDOC ages and ages ago, and thankfully before it completely fell apart. But I mean, I gave a chunk back before I got out. But yeah, for me, TDOC is one that I just would not want to be in. I don't think it's got a really good chance of coming back. I think there's so much competition in that space, and that company itself just seems to have problems. If they had a huge management change, if there were lots of big changes in the C-suite, maybe I'd think differently about it. But
no, I agree with you too, because like you said, it is small enough that I'm not like worrying about it because it's such a small chunk of money. But TDOC specifically is making me just like, even like a small amount of money at this point makes me just want to take it out.
And sometimes that is the best solution.
Yeah.
And there's another thing to look at here too. Sometimes these positions, like it doesn't affect me like this anymore, but it used to. And sometimes you'd have these positions and I would look at my portfolio and I'd see this thing sitting there and I'd see it, down 70%, 80%, whatever TDOC is down, right? Yeah. And you look at that and just every time you see it, you go, and you get angry, or it brings up these bad feelings.
Right.
And sometimes it's just worth it to get rid of it just to make those bad vibes go away. Because you don't need that. You don't need that when you're looking at your portfolio, when you're looking at your other investments. If it's aggravating you, if it's causing you pain, then I would absolutely say get out.
Yeah, I mean, I was leaning towards that already, but yeah, I mean, talking to you about it, just it really is true. And fun fact, actually, my chunk of my position, I actually sold at a profit.
Oh, cool!
Like in the 200s.
Yeah,
like this
awesome.
The way like this is like December.
Yeah.
But then I still felt like maybe there was still a chance, and I left maybe like less than a quarter of my original position, and then I was just like, well, yeah.
But yeah, that's actually, that is one of the hazards with, I mean, I think it's awesome that obviously it's wicked that you sold when it was up in the 200s. That's excellent. You took some money off the table. That's fantastic. I think everybody should do that sometimes, right? I know, with most long-term investors, they just say buy and hold it forever. And I really don't totally agree with that approach. And what we've seen over the last year, I mean, is why I don't agree with that approach, right? But you did take a bunch off the table, but you left you with a small position that you kind of figured, it's sort of inconsequential. I'll just hang on to it. It's not that important, but it's still real money, right?
Right.
And it was
enough to make my profit less exciting.
Yes, exactly. And that money could be deployed elsewhere. Now, I think you would have had, obviously in the last 6 months, you would have had a hard time finding anywhere else to deploy that cash. I guess you could have found some stuff that maybe went down less than TDOC, but it would have been hard to find something that went up over the last 6 months, unless you went all whole hog into energy.
Right.
So yeah, it's not like there's really sort of opportunity cost there yet, but there will be opportunity costs there one day. When we really are coming out of this bear market, and we might be now, maybe what we saw today is the beginning of a turn. I don't want to get people's hopes up. I mean, it's only one day, right?
Yeah.
But we had 7 down days. That's really rare. The last time that happened, I believe, was 2018.
Yeah, I saw in the morning briefing. Yeah.
It is a thing that only happens every few years. And even, you know, all through COVID, you know, the COVID crash, we never had 7 consecutive down days. You know, in the beginning of this bear market, we never had 7 consecutive down days. It's a rare occurrence, and to me, that looks a little like capitulation. Now, obviously, we have to follow through here.
Yeah.
And it is, like I said, it's only one day, but it is hopeful.
Cool. And then I guess another question, like you were just kind of just talking about, like we are in a bear market, and would you say like the start of it was like maybe January or February, correct?
Yeah.
I know, like, you know, I would consider myself still fairly new at investing, and I think you get really impatient because you want, you know, to find really nice setups and really nice plays and things like that.
Yeah.
And things to just start going up. Is this in like an abnormally long time for a bear market? I feel like it's not, right?
No, it's not.
Everything's kind of normal, right?
Yeah. So what actually the bear market that was abnormally short was the COVID bear market, of course, right? Right here. Very abnormally short. Now the 2018 did become a bear. That would be this one, and this was about, so this was the high here was, when was that? Yeah, September. So this was exactly 3 months long to get to the bottom, and that one was pretty quick.
Yeah.
And this was pretty much exactly a 20% drop, and that's sort of the official. It's got to be 20% for people to call it a bear market. Some people don't even call that a bear market. I do, though. It's good enough for me. All right, so you know, compare that to what we've got going on now. Actually, let's go back to, you know what? Let's go back to 2008. Oh yeah, the 2015 as well. See, this one wasn't, you know, again, if not totally officially a bear market, I think it did come down 20%. Let's see. I guess that's where it peaked out there, and then it kind of bottomed about here. Yeah, so all of this was only 15%, 15.5% in the SPY. So officially not a bear market, but you can see there was a period here. And it really kind of started back here, right? It kind of peaked out here and didn't do much. Again, never got back above that. So that was February of 2015. It didn't get back above that level until July of 2016. So that's quite a long time. And it was February. So, you know, if we started kind of here, you know, February of 2016, and we really didn't put in the lows until almost a year later. You know, 11 months later is when kind of the lows went in and then started to come off those lows. So that one took a while, even though it wasn't a real bear market. And then if we go to 2008, so we'll have to squish up a little bit here to see how long this one took. So, you know, we peaked out here in October of 2017, and then put in the low in March of 2009. So that was a year and a half from the high down, you know, to the low. But, you know, what a rally, as you know, that we had, you know, coming out of there, right?
Yeah.
So these things do take time. There's no kind of set time. And Ken is saying, you know, asking historically, doesn't a bear market normally last about 6 months? Yeah, I think, you know, typically, if, you know, people would say 6 months to a year would be fairly typical. So, you know, how long are we into this now? So when do we topped out here in right at the beginning of January, right? So we're now, you know, in our 9th month of this. But really, the consolidation, this really kind of started to consolidate and end, or the bull run there ended, back in November, December of last year. So we're getting really close to a year on this. So we're around the time we would expect us to be coming out of it.
Yeah. Yeah.
And I think
fingers crossed.
I think that a lot of people are expecting, too many people, in my opinion, are expecting us to come down and test these June lows. They're not going to be happy that, that this bear market is over until we've tested those lows. And I think there's a good chance we don't. I just think there's too many people just sitting on the sidelines waiting for a test of these lows. But there's other people who are going, you know what? I don't think so. There's too many of you looking that way. There are deals here, and let's start buying. And that's a lot of what we saw going on in here. And is that what we saw happening today? And when we get up high enough, all these people have been waiting for us to come test these lows again with all this cash that they're sitting on top of, are eventually going to get FOMO and they're going to jump in. And if we get back up to here and break through here, or we break through this 200-day moving average right here where we stalled out last time, that's when they're really going to get FOMO and pile in. So, we want to be thinking, it's risky here, right? But we want to be thinking about looking for really good companies to maybe get into and buying strength, right? We don't want to buy those weak companies. I don't know what TDOC is doing right now. I haven't looked at it in a while. I'm sure it's down around lows. Yeah, there it is. I mean, it's still down on these lows. This looks bottomy, right?
Yeah.
There's definitely some half decent support in here, but really it shouldn't have. After doing this 1, 2, 3, triple bottom here and coming up, it should never have come back down here again. It really should have. That should have been enough for it. Even if it just consolidated sideways, it shouldn't have got down to this level again.
Yeah.
But yet it did, right?
Yeah, I considered selling when it hit 40, but then it looked promising. I was like, oh, we're going to fill, there's like this huge gap here.
Yeah.
Like maybe, and then, nope, back to 30.
It should have been promising. It should have been good. It should never, it shouldn't have broken that line.
Yeah.
Right. And that right there, I think, and after this had been at 40, maybe if you see this happen again, hopefully you don't, right? But if you do, look at a trend line like this. It goes up, it hits the 40 and even higher, right? 45 up here.
Yeah.
Okay, you can forgive this pullback in here. That's fine. Consolidates, starts moving up. But when it starts rolling over here again, and then it failed to make a higher high, right? And then it breaks that trend line. That's when you got to go, okay, no, that's my line in the sand, man. I'm out of here. I'm done with you, TDOC.
Yeah.
And I think you got to say the same thing. If if you lose these lows right here,
That's it.
that's it.
That's it. Yeah, I agree.
And I'm not even gonna call that a major support, because I think there's a good chance that it drops this level.
Yeah.
That one right there. But it did turn up today before getting there. So
Yeah.
that is, we got 1 day of bullish.
Yeah.
1 day of bullish right there.
But cool, man. Appreciate it as usual, Kevin. Thank you.
Yeah, no problem. Okay, I see Ken has asked for a couple. We can totally do these. So let's take a look at Neo first for Ken. And okay, they probably don't need to see Playboy. Let me know, Ken, if you do want to look at Playboy, I'll pull it up. But even though there's probably not much to see there. Probably looks a little like TDOC, unfortunately. Okay, so Neo had earnings yesterday. Is it earnings this morning? I guess it was this morning. Okay. All right, so in Neo, we were looking at this. We've been looking at this cup and handle. We had some nice channels in there. And now we're forming this sort of giant downward channel extension of this handle off this cup, right? The the handle has been going on pretty much the same amount of time that the cup was being built. I think that probably isn't great. All right, so what do we got? So we got this downward channel, and it tried to break out of the bottom of the channel. Well, it did break out of the bottom of the channel this morning on these earnings, gapped down, moved up, pulled back a bit. So that's not ideal. You would have wanted to, I mean, and that was a really nice move up that it had today, but that was a pretty big pullback too. I want to look at this. I want to look at intraday chart on this to look at this price action today. Let's go to our 5 minute. Yeah, see here. Okay, so all right, so here's the pre-market open right here. So this is oh wait, no, sorry. Yeah, here's our pre-market 4 a.m. Eastern here. So they had earnings. I guess they released their earnings at 5:30 this morning. Went down on that. Bounced around, flopped around in the pre-market. Started coming up a little bit before the open. But this opening candle, this is a 5 minute chart. This is like this giant move in 5 minutes. I mean, that was just amazing here. Went up, pulled back, retraced a bunch of that, probably about half of that, right? And then just went sideways the rest of the day, like dead sideways. I remember actually mentioning, maybe it was after this consolidation. If you go look into the short-term trading channel, you'll see where we talked about this very briefly and how I thought this is going to break out one way or the other. And it did break out, had a nice little move, and then just gave it all right back and went back into that consolidation zone. So yeah, that does not bode well for this moving forward. You know, it moved up a little bit, but just couldn't get going anywhere. There's got to be some sellers in here. So let's move back to the daily. You know, what is that? Where does that leave us? I would be kind of concerned here. I would be concerned that, you know, this is going to roll over, that if this starts to roll over, those sellers who were there intraday are going to become more aggressive, and that we're going to see this move down. Yeah, so if it does move down, I mean, where do we come to? The $16 level for sure is a place where this may very well find support. So we can get that in. So that's right around here. You know, we got pretty close to there today. You know, aside from that, I mean, there's other areas down here, but they don't look very strong, right? And then of course you've got to watch out for this all-time low here. I think that's all-time low. Oh, okay, yeah. I mean, this goes. Yeah, interesting. Yeah, it should have pretty decent support in this area as well, if it gets down that far. So I mean, that gets down around $12. So I don't think it'll go there. So yeah, I think the thing to do here, Ken, is to read this earnings report. You know, read through the transcript of the call, maybe if that's available to you. You know, do some research and figure out if you still like this company. Because obviously there's something in there that the market didn't like this morning, right? This really, it must be mixed. It must be a mixed report, because they hated it at first, but they were willing to buy it a bit, and they sure bought it at the open. But that it couldn't, you know, but it couldn't go back up. It wasn't going down. Yeah, it's got to be a mixed report. Ken says, all I know was that they beat on top line and missed slightly on bottom. Okay. There's got to be something with guidance. You definitely want to look at their guidance going forward. Look at their sales numbers. Are they growing like they should? Maybe the growth isn't what it should be, or what the market is expecting. So those are areas that I would look into on that. Because you know, technically, from the charts are telling me, so it's 22% doesn't seem great for an EV company deeply embedded in the Chinese market. That seems weak to me. Although you kind of gotta forgive them for having weak growth in China, though, right now. Yeah, but I don't know. I mean, I don't know Neo well enough to know if that's good or bad, or if that growth rate is slowing. But that's definitely the area you should look with lockdowns affecting companies' performance. Yeah, no doubt it is. And maybe this is affecting it more than the market was expecting. Maybe they'll get a pass on this. Maybe this will just go sideways for a bit until we see their next round of production numbers or something, and then maybe it can bounce. But right now, I think you need to be careful here and just do a little more research. Could be a buying opportunity, but technically, it looks like it's going to kind of consolidate. I would guess a consolidation down here for a while. All right. That's Neo. Callie, I think this is Callie, right?
Yeah, it's me.
Yeah, it is Callie. Okay, good. You got a different name every time you come here. So Callie said, what do you think about the recession talk? Will that affect the market more if we actually go into one? Some people say we're not in one yet, so I'm just wondering. Okay. Yeah, absolutely. There's been recession talk. Technically, we are in a recession. We're not officially in a recession until this committee. There's an actual committee in the government, the recession committee, and this committee decides when the economy went into a recession, and then when it comes out of a recession. And all of this is done in hindsight. They are usually at least 6 months late on calling the beginning of a recession. So now we've had 2 quarters of negative GDP. So that is one measure the measure that people have always kind of used. So by that measure, we are in a recession. But people say, well, the job market is so strong and this and that, and so big debate whether we're actually in a recession or not. I don't think that's really the important thing. The important thing is if we go into a recession, how bad is it going to be, and how much will it affect earnings? Because if the E in the price earnings ratio comes down, then the price has to come down too. So that's what we need to watch out for. We've got to be watching out for the guidance that's coming from the companies we're looking at. Are they guiding up or down? And if they're guiding down, just how badly is it? And that's what's going to kind of wreck the market here is if a lot of companies start guiding down or they start missing their earnings in next earnings season, that's really going to haul the market down with it, and that could potentially set off a crash. So I think we're set up right now in the market to handle a little bit of contraction in earnings, handle a very minor recession, the soft landing, so to speak. But I don't think we're priced in for a big drop in companies' earnings. And that would really affect the market in a negative way. Does that make sense, Callie?
Yeah, it definitely makes sense. I think I'll just stay with, like you said, investing in like stocks that obviously won't fall forever, like Apple, Nvidia. I wanted to see if you could actually take a look at Celsius. It did. Remember, you were looking at that island reversal, I think you called it.
Oh, there was the potential there for an island reversal. Yeah, I remember that.
Yeah, it did go up, and then of course, the market didn't last too long, but it did. It made a new high.
Okay, cool. That's good.
Yeah, that's one investment that I'm glad that I bought it at 30, so we're good right now.
Okay, so Celsius does not want to come up for us. sure what's going on here. E-signal was being a little slow, which is odd. All right. Okay, yeah, so we're right back to that level. I think, you know what? It must have been back over here when I was worried about an island reversal, right? You know, because you got the gap up and it's got support, obviously strong support now, right at that gap. So here we are. I mean, like, this is great, right? This stock is acting like the market. It looks very much like the SPY, where you had, you know, you got your support level, you got your trend line, and it's bouncing right on it. This is exactly what you want to see happen, you know, if you're bullish on this stock. This is perfect technical behavior. Supported right where it needed to, right where it should have. You know, you can't look at that and tell me technical analysis doesn't work, right? Because when did I draw these lines? When was the last time we looked at Celsius? Like 3 weeks ago?
Yeah, that's why I wanted you to look at it again, because it's like you called it to a T. Like, it looks so good. I was like, wow.
Yeah, you know, yeah, that's awesome. Thank you. Thank you for pointing this out. I like it. I like it when my lines work. You know, they don't always, right? There are, you know, don't get me wrong. There are times when technical analysis fails us. But right here, this is like perfect technical behavior. There are obviously plenty of people out there drawing the lines the same way I do. You know, and it can become self-fulfilling, but that's fine, right? You know, this is how we make money. And this is a nice move. This is, you know, from $93, $94 to where are we at? Or yeah, it's up like $5 today. Over 5%. Excellent. So for tomorrow, yeah, and just like, you know, I was saying in the markets, we want to see some follow through. We want to see this continue to move up. We want to see this break through this 21-day moving average, no problem. You can see that 21-day moving average. I mean, this, you know, it had acted as support for a couple of days, and then it acted as resistance for a couple of days. So I think it's important this gets through here cleanly tomorrow. But that's, you know, like I said earlier, that is all up to Jay Powell and his speech before the open tomorrow morning. So he'll have, you should listen to his speech tomorrow, Callie, because, you know, he might have something to say about the recession.
Yeah, for sure. I think it's at 9:10.
That's right.
Pretty odd, but
yeah,
he's probably going to set the tone for the day.
Oh, definitely. You know, and I think, you know, hopefully he's had some sleep, because he just seemed kind of tired, worn out, and angry last time. So hopefully he'll have a good night rest, be in a better mood, and the market will pick up on that. Because the market is expecting him to be in a better mood. I don't think they're necessarily expecting him to be all dovish and everything, but I think that the market's really kind of hoping here that he's a little less hawkish. And that's all he's got to be. He's just got to be just slightly friendly to the market, and you know, we can get a little bit of a rally going here, in my opinion. All right. So does anybody else have anything they want to look at? Not, I don't see anything coming in here. We'll, you know, if there are any last minute ones, feel free to type them in there. But we'll move on and take a look at what we've got coming up the rest of the month. So as usual on Sundays, sometime on Sunday, we'll be releasing a, you know, the weekend edition of the market briefing video. And then we're going to be doing, you know, Ticker Talk is now on Wednesdays, starting at 7 p.m. Eastern. So that should hopefully make it easier for people to jump in and join us here. So hopefully we'll see you guys on some upcoming Wednesdays. Don't have any educational sessions coming up this month. If there's anything that anybody wants me to either do a complete session on, or maybe devote a little bit of the Ticker Talk to, if it's a sort of a shorter, smaller subject, let me know, DM me, or let me know in the Discord. you know, happy to look at people's ideas and see if there's something we can do. So yeah, don't be afraid to make suggestions. I'm all for it. So if you guys, anybody who's watching the video, hope you've enjoyed this. Give us a thumbs up there, and we will see you all again soon. Thanks, everybody.